Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Ball. Thank you for being with us. This segment is brought to you by Commercial Agent Success Strategies. It is video training for advanced sales, marketing, and negotiation training for commercial real estate agents. You can check it out at commercialagentsuccess.com. Today we are talking about multifamily, the apartment industry, the darling sector of commercial real estate. And I think everyone is curious what is going on in multifamily. We see a lot of cranes. We've seen a lot of good news for a long time. How long can the good times last? Well, let's find out. Please welcome my guest is Jay Parsons. And Jay is VP of Asset Optimization with RealPage, and he's joining us on Skype. Jay, good to see you again.
Thanks for having me again, Michael. Well,
I love that look of your headquarters there behind you. Awesome, awesome. So Jay, how long are the good times lasting? It seems like there's been a bit of turmoil recently with stock market gyrations. There's a government shutdown. Some people are nervous. Should we be nervous about multifamily?
You know, yeah, the headlines never look very positive these days, so they haven't for a while. And because of that, I think you keep hearing negative outlooks for the apartment industry. And yet what continues to happen is more good news. And it's hard to really downplay that. We continue to see remarkable consistency for the apartment sector. And in times like now, consistency is a very good thing.
Right. So occupancy and rental rates, are they still growing slightly, or are they flat, or what?
Yes, occupancy is at 95.4% across the country. As you know, that's a very healthy rate. We're up about 40 basis points year over year, in spite of seeing 300,000 units completing. And we've been around the 300,000 unit mark now for the last couple of years. As you know from our past conversations, that's the highest levels we've seen since the 80s. It keeps coming, and yet demand keeps coming as well. We continue to see there's a lot of demand for rental apartments, and that's driving up the overall performance of the sector. On the rent side, this has been, I think even more good news. Rent growth has accelerated. That's something that we had talked about previously, something that we expected to see a little bit different from the general narrative for the apartment industry. Rent growth is back up above 3%, now at 3.3% year over year as of Q4. Obviously a very good sign, particularly when you're completing as many units as we're completing right now. And what's happened is a lot of these markets that have been so hot for demand, where supply started to really ramp up and operators got a little nervous and pushed back a little bit on rents, places like Austin and Nashville and Charlotte, Raleigh, Denver, Seattle, the Bay Area in California. All of these spots are places where we're now seeing rent growth actually accelerate, in spite of the fact that for the most part in these markets, supply isn't slowing down. And it just reflects, again, the strength of demand in these markets and really across the country.
Well, what's creating that demand? Is it job growth, or what do you see?
Well, it's a couple of things. I mean, we always talk about demand as, it's fairly simple. You need jobs and you need the demographics. And what we continue to see is that the job story, I think, is generally better than what most people realize. There was a lot of nervousness going into the latest jobs report, and sure enough, we saw last week in the news, we had really good jobs number once again. And so that's been a very positive factor. And the other side is that the demographic tailwinds still remain very, very positive. You know, Michael, it always amazes me how much people get so wrapped around the easel on millennials going out and buying houses as if this is the calling to the death of the apartment industry. And, it continues to be, I think, a very, very small factor in the grand scheme of things. And as we talked about previously, people going out and buying homes, this is not a bad thing for the apartment industry. In fact, we think it's a good thing, because home buying tends to be a trigger for broader economic health, which is then, of course, boosts demand for all types of housing options. And so, yes, there's more people buying houses, but at the same time, there have been more people buying houses. There's been a little bit of a slowdown of late, but overall, the demographic story remains very favorable for the apartment industry. Still lots of growth in the 20-something demographic. On the other side of it, you have a lot of talk about baby boomers renting apartments. We're not, as we've talked previously, we don't think that's happening in big droves, but the population of that demographic is so large that even the steady share of that group renting apartments is going to mean a lot of net demand for the apartment industry. So again, there's a lot of demand out there, and it's coming from a lot of different places, but bottom line is it's a good story for the apartment market.
Yeah, we're talking with Jay Parsons with RealPage about the apartment market. And Jay, it seems like the rental housing market, the single family home rentals, have also been doing well. Am I right in that? And might that have any impact? One of the things that we're seeing in some markets is entire subdivisions of homes being built all for rental. Does that have an impact on the apartment market?
That's a great question, and that's very much a thriving industry. It's a market that's been kind of a shadow industry for so long, and no one's really been able to know what's going on with that sector. But what's interesting is we found out through the recession and the recovery and now this recent boom is that the trade-off is not between a rental apartment and a rental single-family home. The trade-off has actually occurred between buying a single-family home or renting a single-family home. And the Mortgage Bankers Association did a study on this a couple of years ago, and they showed that the demand that went away from home ownership actually went to renting single-family houses. And when you think about it, it makes sense because once you're either in a single-family phase of life or you're in a multifamily phase of life, meaning you got a family, you got a bunch of junk, and you've accumulated a bunch of things, you're going to fit in a single-family house. And whether or not you're buying or renting, that's going to depend on a lot of different factors. Or you could be in a multifamily phase of life, which typically means you're either younger or maybe a little bit older and you're an empty nester, but you don't have as much stuff and you're not as concerned about things like schools and having a lot of room.
Right. I remember in some of the past markets and past real estate, I guess, cycles where we saw a lot of apartments being built as condominiums, and we saw even a lot of apartments being converted to condos. At least in the markets I work in the Southeast, I don't seem to be seeing that anymore. Why is that, Jay? Why aren't some of these developers building condos? Or why, I guess the real question is, why aren't people buying condos if interest rates are low, we've got great job growth, why do so many people rent versus want to buy?
Yeah, that's a great question. You're right. We really don't see condos being built anywhere outside of South Florida, aside from maybe occasional spots in places like New York. And I think the reasons are, there's several different reasons, but I'll tell you, for me personally, the last thing I want to be in the real estate industry right now is a condo developer. And the reason that I think doesn't get discussed enough is the fact that apartments these days, over the last 10 years, we've been building apartments at condo quality and in condo locations. And so if you want to live in a multifamily unit, why in the world would you want to go buy a condo plus pay the monthly condo dues, which in a lot of cities are going to be half the price of renting an apartment, if you could rent an equivalent unit without having to do the down payment and have all the other the challenges of being in a condo. So I think that's been the biggest wild card here, is the fact that we have so many nice apartments now and so many great locations that are truly A++ quality.
Yeah, that's a good point. I wonder how much of it is the people that might be the age that would typically buy these condos, saw kind of what their parents maybe went through with the housing bust of '08, right? And maybe they're thinking, wow, maybe owning property isn't all that great.
Well, plus you buy a condo, you don't actually buy any real estate. You're buying a room. So.
Right. That's right. Well, what else would you leave our audience with, Jay? Is there anything that we might want to watch for or be concerned about related to multifamily?
Yeah, I mean, 2019, I think will be an interesting year. We do think that rent growth will remain positive, although, as usual, what we've seen over the last, what's been different now versus, 2, 3, 4 years ago is that 2, 3, 4 years ago, it was a rising tide boosting all ships. Everybody was doing great, no matter if you're Class A, B, C, urban, suburban, big market, small market. It definitely is more strategic right now. And there are some spots I'd be more cautious in. There's a lot more supply ramping up in Southern California, and that's an area that, as you know, there's not been as much, or at least quite as much of a robust economic story as there has been elsewhere. And that could be a challenge, particularly in Los Angeles. In general, there's still the same story as this year, which is a lot of Class A, high quality urban supply. All that stuff that's taken away condo demand in downtowns across the country. That's still going to be a factor in 2019 as well. Places like Seattle, tons of stuff coming online. So there's still going to be some operational challenges. But I think where you're going to see, if you're in the industry, I think you can still be optimistic about large swaths of the sector, primarily being I would say these high quality suburban areas where you have Class A, Class B plus units, you don't have affordability challenges, you don't have a lot of supply coming into those types of submarkets. I think you could feel pretty good about that. And from an investment standpoint as well, we haven't talked about that much, but there's still a lot of money flowing into the apartment sector. In fact, we're still waiting on the final 2018 numbers, but it could turn out to be the top 2016 for the biggest year to date in terms of dollars traded for apartments. And where I still think you're going to see some opportunities, and maybe there's still some efficiencies or inefficiencies in pricing, I should say, on the positive side for a buyer, are in these high quality suburban areas. So that continues to be our sweet spot for the sector.
And what are you seeing for cap rate trends with pricing kind of throughout 2018 and your expectations moving into 19?
Yeah, cap rates can continue to be on average in the mid fives. Obviously, as you know, there's a wide range. You get into some of these, downtown core market spots. You're looking at the low threes or even lower in certain cases. But where you're seeing some compression, obviously, is going to be in some of these Sunbelt markets where there's been room to see some compression. So I think the last number we saw for Q4 is around 5.4%, and it's been right around the mid fives for most of the last year or so, and I don't think you're going to see a lot more compression from there, but I do think you could expect to see the cap rates remain fairly stable in that range, simply because there's a lot of money that's interested in multifamily, and even with some of there's been so much noise, as you know, we've talked about this in the past, about interest rates and rates going up, and those hikes in the grand scheme of things have been fairly minor. It's not been nearly enough to dissuade investors from entering the sector.
Jay, has your opinion of 2019 or the length of the cycle changed any in the last month or so with government shutdown and stock market gyrations? Has your view changed any?
Yeah, that's a great question. I think that, like most people, we want to maintain a somewhat cautious approach, kind of wait and see. But at this point, there's been an evolving door of negative headlines and volatility. You think about all the headlines that about interest rates, about the political environment. It's not like we've gone from a rosy picture to all of a sudden there's a government shutdown and everyone's freaking out. It's been, there's been freak out going on now for 2-3 years, and somehow we just keep on going. And so it's not going to continue forever, but am I seeing any flashing red lights that's going to stop imminently? No. But I think we're also seeing maybe some flashing yellows that have been going on for quite a long time, and we just don't know yet when it's going to turn red. Yeah.
Well, it's good to see multifamily keep rocking and rolling. Jay, great information as usual. Thank you for joining us.
Thank you, sir.
If you'd like more information from Jay, their website is RealPage.com. Check them out, their products and services, and stay with us. We'll have another view on the market. We'll also have a developer manager and get his view of what he's seeing from his desk. And lastly, a lender, what to expect moving forward for financing. Stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show.